The stock market is crashing, the Fed is raising rates, inflation is at an all-time high. Let me show you how to play this in your portfolio. Let's go. What's up, everyone? It's Eric from Option Edge, and today we're going to look at how to add a couple short deltas to your portfolio if you're bearish. I am bearish currently. So I'm looking at the NASDAQ QQQ. I want to do a simple short call spread, and of course I've made another video. This is Alpha Boost. I get AI generated trade ideas based on the different stocks, IVR, which is of course implied volatility rating, rank. So that's a percentage for the year. So basically right now the QQQ is trading at 80% higher. The volatility is 80% higher than it has been at any point in the year. Okay, so this was sent out yesterday. So right now, let me show you where the QQQs currently are. So currently the IVR for the NASDAQ ETF QQQ is 83. So we're up from what that that Alpha Boost was showing us. So implied volatility is even higher. And if you'll notice, we're trading at $272.63. Let's go back. And when this was sent out, we were trading at $275.44. So we're down $3. So if you look here, this is suggesting a 222 call, selling that with a 296 call behind that, buying that. And then right here it gives us the stats of what that would look like. It would be a credit for $1.41, or max loss would be 259. It's a 4 wide strike spread, so you take the max profit minus the width of the strikes, which is 4, and you get your max loss there, and then it gives you your delta and your vega and your theta. Okay, so this is showing us that we're short, directionally we're short, and that volatility vol wise, we are short vol. So all right, I'm back in the Tastyworks platform. So the QQQs are down somewhat, so I want to go with instead of selling the 292, I'm going to sell the 290, and then I am going to buy behind that the 294. So basically we've gone down $2. The strikes, we've shifted them down as the stock has fallen. And let's just take a look at that. So for this, we're getting $1.35 versus that $1.41, and this would be our max loss. And our theta is 1, our delta is almost 4.5, and let's see, IV ranks 83. Total extrinsic value would be obviously the amount of the credit received. So that is basically the trade. I've already put this into my portfolio. You're going to be, like I said, you're going to be short some deltas. We're going to be short vega. And I'm just going to go over to the chart, the QQQ chart, just to take a look at some support resistance and see where we're at. All right, so we're back to looking at the chart, the QQQs. So we got some major support at right around 270-ish. Let's see, yeah, 270. So it's sort of do or die. The question is, will we break down further in the near term? I think in the near term, maybe not. We might test some support, which we're sort of doing now, and just sort of bounce around at least for another couple weeks before we break through this. I could be wrong. The break could be coming any day. It could be happening. It could happen end of market today. And then right here, this red line is the basically our break-even point. It's so our short strike is 290, but then we're receiving a credit for $1.30-ish. So 291.30 is going to be our break-even point. So the question is, do you think we're going to rebound in the near term to that level? I would like to think that we're going to stay below that level. And then just to zoom out a little bit, you can see some definitely a good trend line, support line with a lot of different consolidation points. So, yep, like I said, this is for informational purposes, educational purposes only. So do with this information what you will. And yeah, that's it.